So welcome back, everybody. You are joining us live at FinTech Festival India's digital mega event. So leading banks are pivoting and rebooting their strategy, capitalizing on the pace of change and innovation and setting their course for the next decade. By 2030, banking will be invisible, connected, insights-driven, and purposeful. So our next session looks at the future of banks and banking. So moderating this session today, we have with us Dr. Jasmin B. Gupta, National President, Financial Inclusion, Women's Indian Chamber of Commerce and Industry. Jasmin is joined in this session by Zennon Kapron, founder and director, Kapronasia, Carmen, Vicelich, founder and global CEO, Valocity Global. So welcome to FinTech Festival India, everyone. So over to you, Dr. Gupta.
Thank you, Gitanjali. Good morning, all of you, and welcome to this amazing and interesting trilogue on a very nice topic. Where did the banks go? Invisible, connected, insight-driven, and purposeful banks of the future. I think this topic is extremely relevant in this time of fintech revolution, where we see the fintech industry growing by leaps and bounds. Globally, it is a $135 billion industry. India, especially, ranked 4th globally for fintech VC investments in 2021. And the industry is poised to become a $150 to $160 billion industry by 2025. I'm reminded of the famous quote of Bill Gates, which he said many, many years ago. Banking is necessary. Banks are not. And this quote seems to be very, very relevant in today's time, wherein we need banking, but not necessarily the banks. With banking as a service, with open banking, embedded banking, and various other newer fintech-led business models coming up, we are definitely looking forward to a bankless, branchless banking business model. So now my first question to Carmen, to you is, how relevant do you find this particular question? Where did the banks go in the context of the current fintech revolution?
Thank you. That's a fantastic question. And where did I see the banks go? I think we're really starting to see the banks actually just increase their leverage around digital connectivity and the relevance around purpose and around data-driven and insight-driven is where we're really seeing the prevalence of banks today. COVID has forced us to work remotely and to be able to transact without going into branches. And that's one of the accelerated revolutions that we're seeing with banking, having to move all their services online faster than ever before. We also see the importance of data-driven decision-making. And I think that's where that's really accelerating, that actually banks are moving onto the cloud and creating the infrastructure and the environment to be able to leverage data and to leverage digital. And in the past, obviously, that's not what they always intended. And many banks have been around for many, many years, to your point. And so it's very much a simplification and a transformation journey for them to be able to leverage the technology and the data to become purposeful, to become insight driven, and certainly to become those digitally connected platforms that they esteem to be. And I think, you know, what we're also seeing is the acceleration and the recognition that they need to do this. It's no longer a wish, it's a need, especially when we see the acceleration of other connected platforms where there are invisible banking happening in partnerships such as Apple, Amazon, Alipay, that are connecting into existing infrastructure, existing platforms, and delivering invisible services that are making our lives easier. So the combination of all of those things, us as customers wanting things to be simple and digital and fast and used to now adopting digital solutions, is really accelerating. And so very, very relevant question today.
Thank you so much, Carmen. Zennon, over to you.
Yeah, I mean, oh, sorry, go ahead, Jasmin.
how relevant do you find this in the context of the current fintech revolution?
I think this is a key question. And I think Carmen's answer was very thorough, which doesn't leave me too much to comment on some of it. But I think in addition to that, when we look at the competitive landscape in any financial industry across Asia, it's typically 3 to 5 banks that own 80 to 90% of retail deposits. So here where I'm based in Singapore, you have DBS, OCBC, and UOB that largely control the local market. And, 10 years ago, that meant that these banks were pretty complacent in terms of just ticking along, booking high profits and high margins on their business, but weren't really incentivized to innovate or change. And I think the first wave of the push towards innovation and change was through fintech and the rise of fintech in general. So we started to see players like TransferWise, as an example, or Wise come up on cross-border payments. We've seen local players here in the Southeast Asia market like Grab and Gojek kind of redefining the experience both in cross-border payments and domestic payments. So that was kind of the first wave of competition for these banks. But really, as Carmen kind of hinted at or explicitly said, actually, COVID was the slap in the face that I think many of these banks needed. And we're seeing a forced digitization when we're trying to leverage all of that data, leverage that infrastructure to effectively cater to an audience of one. What we've seen is incredible hyper-personalization around what these incredibly fickle customers are looking for, because when you want to do something like move money abroad in a place here like Singapore, you're spoiled for choice. I mean, you have the telco operators that have options in the form of Singtel's Dash. You have third-party operators like the mobile wallets. You have fintechs like Neom and Wise that are here, and then you have the traditional banks as well. So this is really introducing a level of competition to the market. And I think when we look at markets across Asia, we can look at them as kind of developed and emerging markets. And so in the developed markets, it's primarily a story about innovation and developing competition. And so the narrative, much around these digital banks as well is how do we introduce more competition into the market to get these banks to stop resting on their laurels and actually innovate. But in other markets around the region, especially here in Southeast Asia, indeed in India, it's also a financial inclusion story. For a long time, we didn't really have the tools in place to enable financial inclusion through digital finance, but increasingly with the proliferation of very cheap, cost-effective, and fully functional smartphones, things like QR codes, things like UPI, we finally have the tools in place to really address financial inclusion through digital finance. And so I think, when we look at kind of the two waves of pressure, this wave of fintech and then this wave of COVID, and then increasingly the competition that we're seeing in the developed markets and the financial inclusion on the emerging markets, I think there's a tremendous opportunity, but challenges for the banks as well.
Fantastic, Zennon. And I would like to add here that beyond this, we've also seen emergence of neobanks across the world globally, which are emerging as digital-only banks without any physical branches. I think globally, the industry is 58 to 60 billion market and should be a $330 billion market by 2026 is what is the expectation. Now, if you take a quick tour of how neobanking emerged, I think it emerged in UK with Revolut and Monzo being the first neobanks starting operations, followed by N26 and other smaller banks coming up across Europe. I think gradually neobanking spread to US, and we had Chime, Money, Lion, Bank, Mobile, Current, and other neobanks also coming up, which were completely only digital banking models. And then, of course, Brazil with Neon, Next, DGO, and VBank in China. I think Indian market as well. We've seen a few neobanks emerging, especially in 2021, wherein we saw Jupiter, Neo, Frio, and Epify coming up as the industry-shaping, industry-defining neobanks for the country. And I think Indian neobank industry is also poised for being an $84–85 billion industry by 2026. So the question to you, Carmen, is can you please share some specific case studies from your global experience on how banks have, gone invisible yet connected?
Thanks. That's a really great question. And I think, feeding on your background around the emergence of fintech and how that's evolved, I think we've really seen quite a journey. So it did start with fintechs actually really coming to replace banks. And, we all heard about death by 1,000 cuts. Those traditional lenders. We then saw, they brought on the early adopters, but a lot of traditional lenders, especially this is where I'm putting my money, when we talk about mortgages, when we talk about bank transfer, they put some of their services with these new fintechs, but they didn't actually move all of their services across. And so then we started this era of partnership. And I think we've really seen that unleash where actually, companies like Robinhood, and DBS talks about all the fintechs that they work with, Valocity. Banks started partnering with fintechs. We were always not disrupting banks, we were always enabling banks. We really saw this partnership model that banks recognized they can't do everything. They're not technology companies. So to keep up, they needed to partner with fintech. And now what I think we're seeing is really truly neobanks, truly digital banks that are actually doing the whole end-to-end of banking. They're also then encumbered by some of the regulatory compliance in the process, the increased friction that best practice brings, and the data that they're required to have, which they don't have if they're new, but also at the same time, this friction to deliver a truly digital, seamless and faster experience. And so I think when we talk about invisible banks, I think the invisible is the connection between those two, the partnerships that are evolving where some of these fintechs are invisible within banks, and the partnerships where banks are looking to expand and actually attract customers and deliver services, particularly in payments and online, and making their lives easier, but not necessarily being the front end customer. And so that partnership and expansion is really what we're seeing. And probably some of the best examples I've seen are out of Asia, where you see platforms like Grab. And I'll never forget speaking at Singapore FinTech as Singapore 2020 Money. And really Grab was saying, actually, we had our driver app, and then realized drivers need loans. They're small business owners, and so we partnered with the bank and we provided them SME lending, and suddenly we got so many millions of customers now using this bank product. And those partnerships and those integrations of existing platforms, I think, is where we're starting to see the immersion of the invisible bank, and their products being white labeled and connected into existing platforms and existing infrastructure, and that will continue to expand. But really, I think the future is a hybrid, where actually the invisible may be the fintech as opposed to the bank, and it's really that complementary alignment to deliver a better, more seamless customer outcome, and not necessarily owning the customer, which I guess the best global example is Apple. We all go on, we use different apps on our phone, and we don't necessarily know who's always providing them. As long as it's all in one place and it's easy, we're happy.
Thank you, Carmen. And the same question to you, Zennon. Any specific case studies that you would like to share?
Yeah, I think Carmen laid it out well. I would add to that, as banks need to be careful about how invisible they actually become, because I think the risk in here is that if they truly are invisible to the transaction, then a customer's relationship is with the channel rather than the back-end provider. And we've seen that in China. I think, when you look at Alipay and WeChat Pay, the last couple of years of regulatory crackdown notwithstanding, but if you would ask the average millennial in China who they invested with, they would say WeChat or Alipay. They wouldn't say Tianhong Asset Management or China Asset Management or the providers on the back end. And so I think that's the risk for not just banks, but financial institutions in general is, yes, I mean, it's all good that you have this connectivity and that you're invisible, but the risk is that you become too invisible. And indeed, for many of the millennials that were investing through these platforms in China, that became the case. And I think when we think about embedded finance, there's really two angles to that. One is bringing it closer to your everyday activities. So, WeChat is a great example, and I lived in China from 2004 to 2018, so I experienced that firsthand. And it would be as simple as you're sitting in line, standing in line at a 7-Eleven buying something, and you're chatting with a friend on WeChat, and then it's time to pay. And so you swipe a QR code at the phone, and it's just so simple. It's just so straightforward that it's not totally invisible, but it's very much part of the process. And then the flip side of that is obviously, the Ubers of the world, where we don't even think about making that transaction. The only times in recent past that I've lost my wallet was when I first used Grab here in Singapore, and I took out my wallet because I remembered that I had to pay, and then I realized I didn't have to pay, and I actually lost my wallet in the taxi. Thankfully, this being Singapore, it was returned to me. But the few times that has truly been invisible and truly embedded in the process, we don't even think about the payment. I mean, we think about the ride that we're taking, but the payment just happens seamlessly in the background. And to a large extent, that's what finance should be. I mean, we shouldn't have to worry about these things in the foreground. How are we going to pay for something? And that has changed over time. If we think back, 10 years ago, making e-commerce payment, with the exception of Amazon, if you're using another platform, typically they reroute you, and then there's some external calls, and the payment experience wasn't very native. But now increasingly, on an e-commerce platform, you don't even need to think about it. Click, 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 you bought it, and it's delivered to you a couple days later. So it's really changing the nature. And I think, but whilst it does provide opportunities, it does provide challenges, because I think in certain areas, when we look at cross-border payments as an example, I think, there certainly is a preference for the fintech over the bank, because of the transparency, because of the speed, because of the price point on a lot of these platforms. And so banks need to worry about, they may be providing the back-end infrastructure, but they need to worry about how invisible they actually become.
True. And that brings us to the next question, Zennon, to you. How do you see the incumbent banks rising to this challenge that is thrown by the challenger banks and the newly formed digital banks? And how is technology and data impacting the competitive landscape of incumbents versus new?
Yeah, that's a great question. We've talked to some of the banks here in Singapore, and just for everybody's knowledge, if you might not be aware of the Neobank situation here in Singapore, I believe it was late 2020, early 2021, the 4 digital banking licenses were awarded here in Singapore, and those banks are scheduled to launch later this year, early 2023. And really, as I mentioned before, it's about competition. It's bringing competition into the market. So this has been a key. From the local banks, the 3 main local banks, they've certainly been looking at the digital banking space. I think the general feel that we have is that the local banks are very confident that they can compete. I mean, we've seen this in Hong Kong, right, with the digital banks that have launched there. I mean, digital bank launched and had no fee checking. So HSBC had no fee checking, and then the digital bank had cheaper cross-border payments, and then HSBC had cross-border payments. So the banks can compete. It's just a question of how they're going to compete, and that's the big question that we've gotten from the banks here. It's not so much, what do we need to do when they launch, because they're very confident they can compete, but they just don't know what the strategies are going to be. And those strategies vary by digital bank. And as you rightly point out, I mean, technology is a big part of that discussion. These banks are coming to the market with, a digital first, oftentimes cloud native strategy, both in terms of the infrastructure as well as the platforms that they're using core banking as a service, which imparts a certain amount of agility within that space. But we can't neglect the capital base that the traditional banks have. That balance sheet and the trust they built up over time is very powerful, and that's a key element when they compete in the market.
Thank you so much, Zennon. Carmen, your views. How is technology?
I think it's how's technology? Yeah, I think that's a fantastic question. And, actually Zennon's also answered it really well. And, it's really, when you think about what do they have to differentiate, the incumbent banks have the most data. So they have that historical data that they know all about you. They know your ability to repay loans. They can look at all your transactions, and they can understand your entire life stage to be relevant and deliver really seamless solutions for you. So you would think that that's a significant advantage. The disadvantage they have is all that data is in silos, and they, were created with products. I'm talking to you about a product, and there's different product teams, and all of those product teams have their own KPIs and their own goals. And so if I'm your customer, how do you know what's the next best conversation to serve me, and when, and the best way to deliver the best digital experience and actually meet my needs? And they haven't designed their infrastructure with legacy banking to actually leverage that data, because they never knew from day one that that was going to be such an important component going back historically. And so I think and then when you look at fintech, fintechs have this beautiful native cloud infrastructure capturing data in every place and set up get-go to know, well, actually, what would I like to know? So how will I actually ask this and really deliver the seamless user journey, blank sheet of paper to design, this actual human-centered design way of transacting. So they have this massive advantage, but they don't have the historical data. And so I think, the winners and the losers will be the incumbent banks that can unlock that asset, that can actually transform that data into actionable insight, into a relevant experience for their customers. And if they don't do that, they will actually lose to digital and neobanks, because with open banking, with digital, we're all realizing it's easy to change, and we can walk with our feet. And so I think that's going to be the friction for neobanks as well as for the incumbents to see, well, actually, who wins with the best customer experience, because it's really up to the customers now to decide, and we will, and we recognize that. I think it's really been revolutionary, and obviously has been so much talk about COVID and how much it's accelerated, but we've really seen the incumbents recognize they cannot compete if they're not digital. And that's where, no doubt, Zennon's also seen in the ASEAN markets, we've seen this in the Australian markets as well as India, that actually it's just become completely a race to actually catch up, and that is evening the playing field. So I think it's going to be exciting to see the evolution of competition and innovation, because that's what that brings.
Very well articulated, Carmen. And I think to add a very unique feature that this digital banks and the neobanks bring to the fore is an ecosystem-based banking solution, wherein they are focused on very specific niche target segments. Because fintechs understand that the banking needs and the business needs of millennials, students, women, factory workers, blue-collar workers, drivers, all of these are going to be different. And hence the customized solutions that they bring to the table is something I think that differentiates these digital banks from the rest. I think a lot of innovative models also have been brought forward. We have seen examples of investment-led digital bank or a credit-led digital bank. So each and every digital bank comes out with its own core competency. I think that gives a very fair and transparent competitive marketplace for all the players. So the next question, Carmen, to you is, what makes digital banks insight-driven and purposeful? Purposeful is, where we really want to talk about.
Yeah, that's a really great question as well. And what makes them insightful and purposeful? And I think that, they are really mostly starting off very niche, that they're going there with a distinct purpose to solve a known problem, and recognizing where is the friction. And they have the advantage, with global sandboxes and, encouragement to actually solve these problems. And that is really what makes them so purposeful, I think, as well as insight driven. And when you start with innovative technology that is cloud-based, that is APIs, that is mobile first, you have the ability to action those insights. And I think that's a really core part, because, it's one thing to be data driven, purpose driven, and insight driven. It's another thing to say, well, so what? I know this, and now how do I fix this? Or how do I actually leverage this insight or use this data to change something for the better? And that's where I think fintechs certainly have the advantage, because they're just more agile and they can move faster because of their infrastructure, because they are by definition financial technology and technology first, and that's certainly their biggest advantage. The minute that they're not listening to their data and the minute that they're not agile, they lose all that advantage. And I guess that's where in any challenger innovator market where you see existing incumbents and you see challenger brands, if that existing brand can really deliver on customer needs, then no one will ever leave them. And if they're agile enough to continue to evolve as the needs change, then they'll remain relevant. It's when they don't, then their customers will walk with their feet. And I think, probably the overlaying thing around this is also regulatory compliance, and we can't underestimate that. And that's something that we're seeing is really drives a lot of the innovation, or slows down a lot of the innovation in some of the markets that we're in. That best practice and regulatory compliance and protecting data is always an underlying requisite, and understandably so. We're talking about very confidential data. We're talking about people's money. And so the balance for fintechs will be making sure they are bank grade, secure, they can go fast and they have to go agile, and they have to because that's their advantage. But at the same time, they have to balance that best practice and that security and that compliance with that really, really important data. So that's a friction that I'm sure that they'll continue to have.
Thanks. And the same question, Zennon, to you. What makes digital banks insight-driven and purposeful?
Yeah, and I have to relate a personal experience. I worked for a large multinational bank when I started my career, and I left in 2003. In 2018, I got a letter from the bank, which was my previous employer, that said, "We realize you've left the organization. We're taking away your corporate bank account benefits." And that was 15 years after I left the bank. And it made me realize that if a bank cannot understand its employees at all, how are they going to understand their customers? And that's really the key challenge is we're using banks for banking, but we're not using it for our lifestyle. And one of the things that kind of embedded finance has showed us, especially again, going back to the China example, over that 14 years that I was in China, I used Alipay for a significant part of that. And Alipay arguably knew me better than probably even my wife in terms of my habits, what I bought, my food, because you're doing everything on those apps. And that's really the advantage that these third-party players have. But I think, we need to be careful when we look at some of the traditional players, because, you look at the Revoluts and Monzos, and certainly the growth has been impressive. But what keeps people there? What is the stickiness that brings us back to that platforms? And I think that's the key challenge that a lot of these digital banks have yet to really define. I think it's fine to have a very niche focus. We've seen that with some of the banks like Judo Bank in Australia, focused on SMEs, and they've done very well around that. The question is, can you focus on a particular niche but still be profitable enough to be a sustainable enterprise? And I think that's the big challenge that a lot of the banks are facing right now is we're having that reckoning, which is going to be even more stark this year. We've largely, a lot of these digital banks have been funded on the relatively free money that's available within markets that's fueled the VC boom. But now, as those taps are starting to be shut off and interest rates are rising and inflation is increasing, will they be able to tap capital markets, private markets as much to receive capital? I mean, we're already starting to see down rounds with some of these players as well. So they really need to move from this idea of subsidization to normalization. So how do we keep people coming back without subsidizing the customer experience and without burning VC capital? And that's going to be a stark reckoning, I think, for many of the players, not just the smaller players, but a lot of the larger players too, as we go forward into 2022.
Thanks, Zennon. You've rightly focused on the challenges faced by the fintechs as well. And I would like to know, Carmen, your views on the challenges that you foresee the fintechs will face going forward.
Yeah, I think I have to agree with Zennon, and that's where, I think when I touched on it earlier, that, traditionally these fintechs, many of them are focusing on a niche, and they've, really targeting a specific audience or a specific problem statement, and they get the early adopters. But then to scale, what we've seen traditionally is many of them then have to go and partner with the banks and deliver their service better. And I think we are seeing this evolution of banks really open to partnering, to go, well, actually, if I can just use that technology, that that capability, then why would I try and build it myself when someone's done it incredibly well? I think there's obviously different types of fintechs, and for some of us are providing financial technology as a service, as an enterprise service into banks, and so Valocity is a platform that banks, for example, plug and play and use as opposed to a competitor. And that's where I see continued growth in fintech, because technology is evolving so quickly, and all the things that a bank has to do are evolving so quickly. And they're all still on this transformation journey. And I think so for fintech's partnership with existing incumbents is really an enabler, and certainly a growth that will support that extended ongoing growth. I think continuously there's always going to be this friction across not only fintechs but also major lenders as well, in that just because you can doesn't mean you should, or just because you could doesn't mean you should. And that is most fintechs are obviously focusing on technology, focusing on AI, focusing on machine learning, and focusing on leveraging technology and data to deliver these experiences. And when we balance that, though, at the same time with open banking and also transparency of data and the importance of private data, we start getting a real friction to say, well, actually, we're going to be able to do more and more things. And everybody wants to do things faster and better and more seamless, which means data and technology. But at the same time, as consumers and as people and as humans, I think Zennon said his bank knew him better than his wife. We're going to have to make these decisions to go, well, actually, is that okay that we're going to do that? So if we can see somebody is buying broccoli and wine on a Friday night is less likely to default than somebody buying a 6-pack of beer and pizza, that they're more likely to not pay off their credit card. Is that okay as we start integrating all of this data and as we start leveraging data and using these new tools? And I think that's going to be the continued friction for both fintechs and large lenders to be able to access that data and really deliver faster, more seamless experiences, digital experiences, because digital enables data, but also to balance the changing landscapes of our expectations as people as to what we expect companies to know, how we expect them to use data to deliver digital solutions to us.
Thanks, Carmen. And I think we will have the final question to sum it all up before we move to the Q&A round with the audience. So how do you envisage the future of banking, and will the bank of the future even be a bank? Your thoughts, Zennon?
Yeah, and I think that's a good existential question to finish on. I was having a chat with somebody from the regulator from the MAS here in Singapore. I guess it was about 6 months ago, and here in Singapore, the telco industry was originally effectively owned. It was privately owned, and over the past decade, it's largely been nationalized in terms of the basic infrastructure. It's owned through Singtel, but then it's leased out to all of these other companies. And the example that he gave is, we have the view of the financial industry that banks need to be profitable. Well, does it really need to be the case? And he likened it to the telco industry insofar that right now in Singapore, the infrastructure, both in terms of fixed line, fiber optic cable for internet and wireless, is essentially a public good that people tap into. So you have these MVNOs that are connecting into the infrastructure and providing their own services on top of that. And I think, when we look at the financial industry, this is potentially the way that things could be going, is that we use the balance sheets, the trust, and the basic infrastructure that the banks have in place. But then we have all of these other providers that are providing the services around that. And I think that's, one potential outcome of what's happening in the market today. But I think the challenge of that will be regulation around that, because obviously, there's a tight relationship between the incumbent banks and the regulators, and will they allow that to happen? I'm not entirely sure. So I think, this question about what the role of the banks will be in the future is still very much apropos and apt for this time that we're going through with increased competition. But I think the real question will be what is the role of the banks in that? Is it just a utility, or is it actually kind of similar to where we are today?
Very well said, Zennon. Carmen, request you to...
Thanks. I probably take a different view and think there really is a role for banking in the future and for providing banking services. When we look at how many of our global population are still unbanked, I think we are seeing global adoption and the use of mobile, where certainly we skip certain phases in developing countries, especially. But I really do see that while it's still our money, that there's still this human. We haven't really changed that paradigm that we want to put our money in somewhere that's institutionally credible and that is going to give us that surety. And I think obviously we're going to see this emerge with blockchain. We're seeing cryptocurrency. We're seeing even virtual and metaverses of things that aren't even things. And we're certainly the future is here today. But I still think that we have a long way to go to replace that. And as long as banks are remaining purposeful, then I think they'll continue to remain relevant. And we're really seeing that, for example, in the Australasian market, where they're adopting more of a social purpose to actually recognize they have to be doing things around sustainability, around green finance, around housing for all in India, and enabling a greater population. So not just for profit, and certainly that's where Zennon and I are aligned, not just about the balance sheet, but actually about enablement and about delivering social good. And I think regardless of the sector that we speak about, this is becoming, prevalent, that businesses and brands, whether banks, whether governments, whether utilities, whether telcos, are being judged by citizens of today to see, do we deem them worthy of our custom, worthy of our business, and are they living up to our expectations to be making the world a better place? And I think we are seeing, as I say, so many different things that are being undertaken by both fintech and new banks and existing banks that will continue to remain relevant.
Thanks, Carmen. Very well said. And I do agree to your views that yes, there is a big opportunity. While we see some great financial inclusion numbers, I think a misnomer is that having a bank account means you're financially included, but that's not rightly so, because just having a bank account does not mean you are getting benefit of overdraft. Are you properly insured? Do you do transactions in your account? We see 70 to 80% of the accounts that are opened which are lying dormant and not used. So I think the entire definition of how we define financial inclusion, how we look at financial inclusion from the entire world fintechs data, I think that needs to change. And yes, there is a future and there is scope for banks, fintechs, neobanks, all to exist together. It's a huge market. And thanks, Carmen and Zennon, for your extraordinary views on this topic. We move to some questions from the audience. So there is a question from Esther. Would you throw light on neobanking in India? So I would like the opportunity to throw some light on neobanking in India. So yes, I think COVID and 2021 turned out to be extremely great for the neobanking space in India to come up and take shape. However, I think a lot of new players are expected to join the industry. Indian market is a typical market. It has its own challenges. And while we see neobanks having garnered millions of customers, I think now the challenge is not just to acquire millions of customers, but the challenge is how to get the right customers, how to have the right tools for fraud management, for risk management, how to use the digital footprints of the people and figure out the right people coming in so that the customized offerings that the neobanks want to offer to the customers go to the right target segments. I think that's the biggest challenge neobanks in India face. At the same time, there is no dearth of opportunity. I think there is immense scope for a lot of neobanks in MSME. There are neobanks who want to come up in the student and the kids sector as well. We have neobanks coming up for the gig worker segment. So I think there's no dearth of opportunity. However, every fintech also cannot become a neobank. And I think that's where all the fintechs also need to understand that it need not be the only strategy going forward. And yes, there are also other ways where fintechs can make an impact. So that's about neobanking in India. The next question comes from Raj. One of the core resources needed to drive large-scale innovation is talented people. How do you think banks need to transform their culture, people, policies to be able to attract top talent who are also being quoted by the fintechs? Anyone who wants to take this question?
I'm happy to take that. And actually, it's really interesting. I just recently did a talk where somebody complained to me that Valocity as a fintech was taking all the talent, and that they were, having this challenge. And I think because they were doing transformational projects, of simplification and moving off legacy technology, which wasn't as exciting as coming to work in native cloud with all the latest tools and not necessarily the spaghetti that's very known for legacy. And I think it's really comes down to that purpose. And obviously there's benefits of flexibility or pay, etc. But I really think that in the age of COVID, we're talking very much about an illness and a pandemic, but we've also never talked so much about wellness and about purpose and about actually why do we do what we do. And so I think I would encourage them to still actually try and think like a fintech in that actually what are the goals that we're trying to achieve? How do we celebrate the success? How do we break it down into smaller pieces that your teams are really feeling that they're achieving and they're delivering and they're being successful and that they're celebrating the small wins as opposed to waiting for some of these big projects that are going to take time. And so really that culture of get stuff done and problem solving and agile, especially if you're looking at tech talent, I think will really help you win those people over.
Thanks, Carmen. And two questions. One is with footfalls to branches decreasing, banks are operating with lesser branches. In such situation, do you think virtual teller machines have the potential in BFSI? Anyone wants to take this question? And there's one more which says, how would you like to know the panel? We would like to know the panel views on how do they look at API banking, neobank, and open bank?
Sure. I'm happy to take them. I think for the first question, we really saw the adoption of actual virtual, when we couldn't go into branches, and the really change of even banking policy to be able to continue during lockdowns globally. And in our examples in markets like Australia and New Zealand, banks even rewrote and got from actual regulatory compliance, were allowed to do valuations where the valuer would send a link to the property occupier and they would take photos and timestamp it in our platform, in our app, send it back to the valuer to do the valuation without going into the property and still complete the valuation when they weren't able to use digital automated valuation models or desk valuations. And so changing the way a traditional thing has been done by using technology and also leveraging that connectivity in a single platform. So I think, we've really seen that acceleration of new ways of doing things. And so with branches reducing and with connecting digital tools, we are starting to see that convergence that actually you don't necessarily need to go in a branch. And I think that adoption is really accelerating. In terms of APIs and open banking, I think, that's obviously the way of the future. It's days and see Zennon's view and what he's seeing in the ASEAN market, but in the Australasian market, we're seeing those deadlines extend, to allow banks more time to be ready for this. And we're really not seeing so many user cases other than onboarding. And onboarding in India has really been made a lot easier with Aadhaar cards and identity online, whereas that is still a major issue in some of the other markets that we're in, which will always prohibit. And the increased anti-money laundering is still going to need the face-to-face and the physical documents.
Thank you so much, Carmen. I think that brings us to the end of the session. Thank you, Zennon. Thank you, Carmen. It has been a wonderful trilogue, and I hope the audiences have enjoyed the session. Any further questions, we will take it offline. Thank you so much. Over to you, Gitanjali.
Thanks.
Thank you, Dr. Gupta. Thank you, Zennon and Carmen. Thank you for sharing your views on this topic. So now it is time for us to move on to the next session. So don't go anywhere. We'll be right back. Stay tuned.
100 रुपये में बिटकॉइन ट्रेडिंग
पॉसिबल है
इम्पॉसिबल
लगी शर्त और हारा तो It's possible on CoinSwitch Kuber. Download करो और Bitcoin में trading start. CoinSwitch Kuber. सिक्का चमकेगा.
Cryptocurrency is an unregulated digital asset, not a legal tender and subject to market risks and price fluctuation risks.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, in every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.